evaluating what I believe to be the best forex trading opportunity right now. Hi, it's Charlie giving you Saturday's video. So if I showed you this chart, well, I am showing you this chart, what would you think price is going to do next? Do you think it's going to come down, or would you just purely looking at this information, or do you think it's going to go up? Well, I think a lot of you, if you were being honest with yourselves, you'd think probably going to go up, because we've done this, obviously, a double bottom down here. It's just starting to react back to the upside. So at the very least, yeah, there should be some more upside coming on here. Right, okay. This is a chart of the pound dollar. So if I now just move my chart back down, there you go, the pound dollar, and it's on a 6-month time frame. So I've just shown you, just zoomed right out, so you can get excuse me, a sense of perspective here. So if it's done a major double bottom, big wick low, and it's only in relative terms starting to push up, there should be more follow through to the upside overall there. So when I'm saying what's the best forex trading opportunity, actually I'm not even talking, although I've started with the pound, I've just done that to give you a visual example. Essentially what I'm talking about is the dollar overall, and so these currencies against the dollar. And this is what I'm doing in my trading room. I've mapped this out, that I think this is a 18-month, 2-year trade overall. So what I mean by that is it's of course I'm still going to be in and out within the trade, so to speak, because these are big picture patterns. So if I'm looking for the pound ultimately to come back up into this zone here, which doesn't look very far away on the when you're on a 3-month chart, but we're still looking at 700 pips to 1500 pips away. So it's big moves, and so I'll be looking to establish core positions that I hold on to and then trade around that. So a bit of, banking some profit and then getting back in and all of that as well. So it's an overall trade plan based on essentially a devaluation of the dollar overall. Now, if you go back to my video from I think it's from the 30th of July, the dollar's next move will shock you. I think it was that one, but I think I did another one on the 26th of July talking about why the dollar could crash. Obviously, AI generated that title, but do check out any of my videos that I've done on the dollar, because I've done quite a few technical videos as well. Anyway, so overall we've got some big picture patterns here, and if I take this over to the likes of the euro dollar, it's essentially it is the same. I'm on the 3-month chart at the moment, and I know that people say, oh yeah, but I trade a 5-minute time frame, Charlie. Well, good luck with that. But it doesn't. We drill down to smaller time frames. I still execute, quite often off of something like an hourly or 4-hourly time frame. But what we do is we establish the main big picture first of all. That gives us our directional bias, and then I go down to the smaller time frames like the dailies and even below that, and then look for tradable events or opportunities technically lower down the time frames from that. But we have to start with the higher time frames. So for the euro, I'm not going to go into all of the analysis that I do. Obviously, I do that with my traders in my trading room. And by all means, if you want to trade along with me, just remember I'm one of only 2 authorized money managers in the UK who's also a trader educator. Most trader educators are not authorized money managers. And so therefore, I can call my trades legitimately, because that's what I'm trading within my funds. And so most educators are not legally authorized in order to be able to do that sort of thing. Anyway, so for the euro here, again, it's made these lows. It's diverged a lot off of these 2 lows down here. This was a historical low into historical price levels. Price likes to go back and retrace towards previous lows or previous highs. So it's already made these lows down here. The way it's breaking out to the upside, it should be a shoe-in ultimately for this price zone up here. because that's what price does. It retraces back ultimately into other levels, or once it starts retracing, it will search out those old levels. So that's what we're looking for overall. It's about planning out how you go about, trading that and getting trades. We've literally been trading this pattern this year, and we're literally forming new trades as I speak, and over the coming weeks. We're literally doing that, and we'll continue to be trading this pattern until price does get into this zone over here. So that could be, as I say, a year out. I think my bigger picture pattern beyond that, like I said, is probably 18 months to 2 years. I think essentially what's going to happen, without me going through all the analysis right now, of course we'll do pullbacks, but ultimately I'm looking for this zone right up here into the around 129, 130 zone. But there'll be trades on both sides of the markets, because obviously there will be tradable pullbacks at certain points once we come into some key levels. So whether you're looking at the euro or the pound, it's evaluating the next or the best forex trading opportunity. I could go to the Aussie dollar here. Now you could look at the Aussie, and the Aussie looks a lot and has been a lot weaker overall. But the Aussie is a fascinating chart by itself. If I come down to the monthly chart, there's a technique that I call pebble on a pond. And I've just put my trend lines on. Look at this trend line, this declining trend line that the Aussie is right up against at the moment. It's had multiple tests of this trend line. Now, the more tests you get of a level, then the increasing likelihood is that price is going to break out of that level at the moment, at some point. So it's gearing up, it's consolidating around that trend line, and I am looking for the Aussie to break up as well. So of course I'm looking at a dollar decline story, so to speak, or narrative. And so of course the Aussie is different as far as its technical patterns are concerned to that of the euro and the pound. The euro and the pound are very similar in how they look overall, and the Aussie, of course, is going to look different. It's a commodity currency. Its patterns are slightly different, but overall, there should be upside right away up to 70 on the Aussie, up into this zone. So basically, to take your pick, we're sitting at 65 at the moment, so another 500 pips, and the Aussie has a smaller range than that of the pound and the euro. So if we're looking at ultimately for the euro, 1,200 pips from where we currently are. The Aussie I'm looking at beyond 70 ultimately, but the first main level is going to be 70, but it has a smaller range of course. So the equivalent of 500 pips for the Aussie is probably about 700 pips for the euro, so to speak. So all of them have good potential. So again, you can just sort of almost take your pick out of them. If I come down to a daily chart now, or maybe the weekly, and I'm just pulling us out to the euro, this is technically, structurally a good looking chart. We had this, I know I've gone through this before, but we had this sideways consolidation through the mid part of 23 and through 24. Price broke down to the downside, ended up creating a false break because it broke the low of this range, false break, and I know I've talked about this in these prior videos. Then we climbed all the way back up, broke the high of that range, so we've now have retested and gone higher. It's a lovely looking chart. So whatever way I slice it, this chart should be going higher. Now, and I say whatever way I slice it because of course is there still the possibility that the euro could retrace more from here? Yeah, there could be, and I've got a trade plan for that as well. It means great, okay, I'll buy at lower levels down here if that's the case. But already we're starting to build positions, and so of course I'm always going to do that. If price decides to have a larger retracement, I'll get stopped out of those, and then I can then get a better price in the end down here. But if we break up from here, well, that's fine too. I have a plan for how I'll trade that. So Overall, looking at the weekly, it's a nice consolidation, lovely break. We've had some lovely bull flag patterns along the way, and in fact, so bull flag here went higher, bull flag here went higher, and now overall, just from a technical perspective, on the euro alone, we've got a pennant pattern here. So again, if I draw the flagpole on a bit better, that is a bullish pattern overall. So I'm looking for a breakout from that technical analysis pattern, and that gives upside projections as well into the 120s. So it's the same sort of type of thing for the pound. The pound's got a nice, it's not so much of a pennant. This one is it's a nice bull flag here overall for the pound as well. So they've got some lovely patterns here that are building. So it's a case of, and I've said this a lot, these sorts of trades, and people get really caught up in, bring it back to the daily charts now. So we're still consolidating. We've had non-farm payrolls just yesterday. I'm just recording this Saturday morning. And if we go back to the euro, we had some lovely moves to the upside on that poor data reading again yesterday. The poor jobs report came off from our highs, but we're still consolidating. We've got inflation numbers next week, so maybe the markets have just steadied themselves, thinking, well, let's just see what the inflation numbers are like. We are primed to go higher, but of course we have to always recognize we're still stuck a little bit consolidating overall, but consolidations are great, overall. So we'll see. But ultimately, I'm looking for a break to the upside, of course, out of this. So whatever way I slice it, I'm still looking for more upside here, which is obviously downside in the dollar. So when I say whatever way I slice it, we have to allow, okay, if it did want to do another pullback, coming back out to the weekly time frame, yeah, that's doable. But right now we're primed for an upside break. We had a little look at it yesterday on the back of that poor data, just came back into range here for the euro, this range that it's been in through August. So we just had a first look, and we'll just wait probably through that. We're probably looking at midweek next week to see whether we are going to get a confirmed breakout for the euro and for that Aussie dollar as well. So the Aussie had a look there yesterday as well, and then came back to within this little cluster range. But quite often you'll see price do that sort of thing and then still ultimately go higher. People think, oh God, there's a big wick. And okay, well, I could show you a number of situations like this one here. Oh God, it's a big wick. Oh, within 3 or 4 traded sessions, price has got through that and it carries on going higher. So you see that sort of thing all of the time. So I don't see that as necessarily a negative there. I see that as okay, it's had a little look, suckers some people in on the wrong side perhaps, and then goes maybe late second half of next week. But certainly for the euro and pound, they look like they're gearing up at this stage. So whatever happens, that's the big picture coming back out to the monthly time frame now, or the weekly. You get your big picture first of all, and then you go down to your smaller time frames looking for your setups. So for those of you thinking, oh yeah, but you're looking at monthlies and 3 monthlies, and yeah, they give me my big picture, because I'm looking to hold trades for a lot longer and build positions. But it's the same. So if you were a shorter term time frame trader, so let's say you're intraday trading off of hourly charts, well, you're going to want to use a daily chart as your template to give you your big picture, and then you trade off of the hourly time frame. It's the same principle. So have an anchor time frame, so a larger, bigger picture time frame chart, and then go down to the time frames that you're actually going to execute off. So you get your directional bias off the higher time frame, and then you look for the trade setups in that direction of the directional bias on the smaller time frames. That's pretty much me done. If you want to join me, of course, along on all of this stuff as well, specifically, and see where I'm actually physically trading this, then that's where all our traders are in our community. I'd love more people, if you're watching, to join us in that regard, because it's such an amazing opportunity coming back out to the likes of the quarterly charts. I think there's just some massive opportunities over this next 18 months to 2 years, and I want people to benefit from that as well. These are the sort of trades that don't just make your month, they make your year. And on that note, enjoy your weekend. I'll see you soon.